Here's a detailed breakdown of some textbook bullish options flow from earlier in today, Tuesday, April 11th session. The clip was taken from today's Power Hour stream on Twitch and goes over some cat flow from this morning. Okay, so what did we see today? Let's take a look at what we saw today. So cat, I just type in cat in my filter, so the 260 August is what comes up immediately. So it was the 260 August calls that I saw, and they were pretty interesting. So let's see here. I'm going to isolate it by just clicking this little icon here. If you click on this icon for whatever trade you click on, it will open up a flow feed for just that trade. So I've clicked on that. So I've got filters in for the August expiration, 260 strike call. So that's going to pop this one up right here. Peep that 1 day view. So we saw that activity coming in pretty much right here. And you guys can see it rode up pretty nicely. So what did we see? What do we see? So let's rewind to, let's go to like 10 a.m. What was the volume at 10? It was like 10K. All right, so let's go 5K for the contracts. Maybe that's a little bit too low. Let's try 10K. Maybe 10 o'clock is too early as well. No, that's fine. Let's just give ourselves some more results. All right, so we are looking at the CAT 260 strike calls for August. All transactions that took place from 10 a.m., which is our end time, and then going all the way back to market open. So we see all around 10,000 contracts that traded here. So let's see here. So it doesn't really ping any radar. So like the first 3 trades come in, you don't even see it. These don't even pop up on my filters. A filter that I use is volume is greater than open interest. So at this point right here, it hasn't even broken my feed. But then let's see. Did I see? I think I saw it like right around here. So I saw like this coming in right here. So what do we see here? So I just kind of like ambiguously hearted a bunch of these. So don't look at these specific ones, but we're just kind of basically looking at like this kind of range of trades right here, and just this right here can tell you quite a bit. So actually we'll just lump these in here because they're from the same timestamp as well. So I'm just going to kind of mark a start and an end to like kind of where more information can be brought in. So like I said, it doesn't really ping anything at this point because it's only trading 504 contracts to 560 open interest. So this doesn't even hit my filter. I guess we can even plug in what my filter was to see when exactly I would see it, but it comes in pretty much like right around here, starts coming in. So what do we see here? So always look at the timestamps. We'll always look at pretty much everything on here. We're not going to use one data point to make our decision. We're going to look at kind of like the cumulative sum of the data. Let's actually take this time to just conceptualize what it is that we're looking for. So here's a tweet. We'll just go over real quick. I've referenced it before. You guys may have seen it if you guys have been in the stream. So the perfect storm of flow, give or take, is there's a few concepts here. There's other characteristics, but like I'm obviously constrained to the tweet limit. So the first one is over a short period of time, as opposed to spread out throughout the day. So like, just boom, 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 flow coming in, as opposed to like, here's some volume in the morning, here's some volume in the afternoon, here's some volume like right before the close. You know what I mean? So just boom, 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 boom. So over a short period of time, lots of volume. And in volume, lots of individual buys is better than one singular block buy. We need to be able to identify the flow as being opening activity, a skew towards one side of the bid or the ask, and a contract's premium and IV increasing. So maybe I can actually copy and paste this into a little notepad thing. And I'll just get small here. We can kind of go through like you guys can just kind of look at it and check it off to see like what what is going on. And we'll actually look at another example from the past that was coincidentally the same ticker CAD. It looked exactly like this, and I happened to use it as an example tweet for this concept. So let's just go over it. So over a short period of time, so here is the span of 20 seconds. Here's 2,300 contracts in 20 seconds. If we zoom out just a little bit, here is 5 minutes of trading from 9:59:41 all the way down to 9:55:49. So that's not even 5 minutes. That's 4 minutes of trading, 10,000 contracts, right? So that's more context. So we're not just using 10,000 volume as a data point. We're using 10,000 volume over the course of 4 minutes. Okay, so there's another data point. 10,000 volume over the course of 4 minutes. So here the first two things have been satisfied. Can we identify this as being opening trade activity? So like I said, it doesn't even cross the volume is greater than open interest line until somewhere between these two trades. And it wouldn't really ping like 777 volume to 560 OI, like that's not really noteworthy, but like, you know, once it gets to somewhere around here, you might say, okay, something's going on here. Because now at this point there's, you know, if we look 20 seconds later, there's now 2,300 volume to 560 open interest. Just by doing the eyeball test, you can see that it's primarily skewed towards the ask. If we even flip to this and look at the 5-minute chart, you can see for this specific time frame, the 9:55 to 10 time frame, it's predominantly at the ask. So that is, I guess that kind of fulfills both of these at the same time. So opening activity that we've identified, skewed towards the bid or the ask. Check, check. Contracts premium and IV increasing. That's another check. So here is 20 seconds of trading. Do we not have the stock price on screen? Let's add that. Okay, so we've now added the stock price, so we can take a look at how the stock price was reacting to the flow and how that plays a part in the contract premium. So again, we'll just take the first 20 seconds, like we said, so literally 20 seconds of data right here. What is the stock price doing? In 20 seconds, the stock price went up 3 cents, 3 measly cents. But the contract premium went from 297 all the way to 324. IV went, give or take, almost a point. And if we keep watching, it'll just keep on going up, right? So that's just letting us know there's more and more buyers coming in. We're gonna just keep referring to this checklist. So over a short period of time, so 5 minutes. I guess we can just look at the whole 5-minute period. So 5 minutes, 10,000 volume. Lots of individual buys as opposed to one block buy. So like, what is a block buy? A block buy would be something like, let's see, let's just go Apple 1M. So like something like, I guess that's not a great example. I got it. All right, so let's just try 500K. For an opening trade, no indexes or ETFs. So like here's an example. So like this MHK trade right here. So this is like what is a block. So here's just a big block. It's a single individual buy. So this is like one trade, one block of 2270, as opposed to here in our first 20 seconds example, we have around the same volume, 2300. Over here, 2270. So give or take the same volume, right? But you can see it's taking place over like multiple fills. So we don't necessarily know that this is multiple people, but like just the nature of it being a block is just like not as appealing. So we have established lots of volume, individual buys as opposed to one big block buy, as you can see throughout the 5-minute period. We'll just focus on this 5-minute period. 10,000 there's more than enough information in this 5-minute period that we can look at. So it's like I said, 10,000 volume, identify it as being opening trade activity. So at this point, like 10,000 volume to 560 OI, again, skewed heavily towards the bid or the ask. Let's look at the 10-minute periods here. So the 9, or no, we're still looking for 5-minute periods. So in this 5-minute period, what was the one that we were looking for? Opening trade activity. So when it's just skewing so far one way or the other, like you pretty much know. And when there's 10,000 contracts traded to 500 OI, and again, not like, you know, 1 or 2 blocks where it could be a buy and a sell. Like this is clearly like a lot of people, or at least a lot of activity coming in. You can see the timestamp is just like rapid fire. You know, there's not one. It's not, you know, just one big trade at one time. This is like multiple trades, multiple multiple timestamps, repeated fills, stuff like that. So again, we've already covered the heavy skew towards the ask, contracts premium, IV increasing. So let's just look at the 5-minute period. So we started off at about 28 and made our way almost as high as, so like almost 1.5 points at the peak, more than 1.5 points, and still closing the 5-minute period like 1.25 points higher. What did the stock price do? Stock price ended the 5-minute period 217.93, and it actually lost 1 cent. Lost 1 cent. It was 297. But so okay, so it lost a cent, but it's because of IV, because of all the buyers. IV goes up. The premium has gone up significantly. So here's like a pretty textbook example of just like what you want to see. This is like, I guess, what you call clean flow, but it doesn't happen all the time. Like this is pretty, like this is like if I was going to teach a class, like this is the example pretty much. But it's not this clean, it's not this beautiful all the time. Which is like why I guess you have to be pretty patient. So let's actually take a look at what it looked like in the past. So here's what it looked like, the cat flow that looked like in December, or not December, October, excuse me. October 13th to be exact. The date right here, timestamps right here. So in our example here, I'm using like a 10,000 premium, which is why we can see a lot more examples. In this one, it looks like I'm using a 25,000, so there's less data, but the concept is the same, right? So we can see in this feed, we have about 3.5 minutes of action. The underlying has gone up a little bit, I guess, 40-ish cents. And you guys can see IV has popped almost 2 points, and the premium has popped quite a bit as well. So just the same thing, clear textbook example. It, like I said, it doesn't come out this great all the time. But when it does, just you need to be able to see what's happening, and just make a quick move on it. It looks like they're still in. Now it's kind of difficult to tell, because I know that this contract made the rounds pretty hard on Twitter. Perhaps the open interest value will let us know tomorrow. Like for instance, if the open interest is like 26K tomorrow, then we can pretty confidently say that whoever kickstarted this is probably in. If open interest is like 8K, I'd be less pleased about it, I guess, if I was long this position and wanted to like be in with the whale, because it wouldn't be as clear. But yeah, that's what it looks like. That's what it looks like when it's clean. And a concept that I always talk about is the opening trade activity that you need to be able to identify, and it's not always obvious, right? So sometimes there's a little icon, and in this case it is obvious, and that's simply because of mathematics. The mathematics just happen to line up in which there is no possible way that this is not an opening trade. So for example, we'll just use this one as an example. There's 2270 contracts coming in. This volume value of 2516 includes this 2270, so There's give or take, what is that, like 236, 246? So prior to this trade, there was 246 volume and there was 56 open interest. So when a trade of this size comes into this little open interest and 246 volume, like it could only be an opening trade. There's not enough contracts existing to facilitate it being anything else. Here's another example. Maybe this one's a pretty good one for you to try to wrap your head around. So volume is 2016. So prior to this trade, there was 16 volume, right? So 16 volume, 1970 OI. So if you add 16 to 1970, that's 1986, right? 1986. So then obviously a trade of 2000 coming in. There's 14 contracts shy to be able to do anything else with that. So this as well is quote unquote an opening trade. Now, it being an opening trade doesn't necessarily mean that it's something you want to follow, so keep that in mind. You just need to be able to identify that it is an opening trade or it isn't an opening trade. Now, there's nothing here that explicitly states that any of these are an opening trade, but like you have to be able to reason, okay, like once it gets to there's 4,000 contracts traded here in 40 seconds against 560 OI. They're all skewing towards one way, the bid or the ask. You have to be able to piece together what's going on. And do it in a timely manner, because obviously time is of the essence. All right, so that was pretty long-winded, but I hope that was a insightful explanation.